Okay, you guys, will continue with problem 5-1A, pages 255 and 256. Took care of the 14th. Notice a few of these have some calculations. Sometimes you have to figure the discount in. It's not too bad, especially once you give it some practice. On the 19th, purchase merchandise from Veggie Company, $27,300. Terms FOB shipping point, meaning the buyer pays shipping charges, and we're the buyer on all these transactions. They did not offer us a discount. They just said the net amount is due at the end of the month. Let's also read the next transaction on the 19th. It's much easier to combine these two, I think you'll find. Paid freight of $400 on the October 19th purchase from Veggie Company. Okay. We've talked about this earlier, but remember we said anytime you pay freight charges on a purchase, we're going to add that to the cost of the inventory. Or maybe we didn't talk about it earlier, but we'll talk about it now in detail. Let's think about that for a minute, you guys. That's the true cost of the inventory, right? The purchase price plus delivery charges we had to pay to get it to our store. For instance, let's say if you had a used car lot in Clyde, North Carolina, but you're going to an auction in Charlotte and buying cars for the lot. Okay, if you bought a car for $10,000 and brought it back to Clyde, maybe roughly a 2.5-hour trip, 3-hour trip, and you paid $10,000 for it, well, if you want to make a $2,000 profit, you can't price it at $12,000, right? Because it costs you something to go from Clyde to Charlotte and Charlotte back to Clyde with the car. So let's say that's $200. So what did the car really cost us? $10,200, not just $10,000, right? So we want to record the inventory at its cost plus any transportation charges associated with it. Okay, so we're going to debit merchandise inventory for cost plus transportation. You guys, we're taking care of both transactions that occurred on the 19th with this one journal entry. So our debit would be $27,300, the purchase price, plus the $400 in transportation charges, $27,700. We purchased that from Veggie Company, so we're going to credit accounts payable Veggie Company for the actual purchase price. That's how much we'll owe them, $27,300. And if you notice on that second transaction on the 19th, it says paid freight. Well, if it says paid, we know we now have less cash, asset that decreased by $400. So that takes care of both transactions on the 19th. We debited the asset merchandise inventory for the purchase price plus transportation charges because that's the real cost of our inventory, and we want assets on the books at their cost. We credited accounts payable Veggie Company for the amount we'll owe them, $27,300, and we credited cash for the amount paid out for those transportation charges, $400. Okay, next on the 20th, purchased merchandise from Caesar Salad Company. They're killing me with these names, all of them, with the exception of the first one has to do with food. I'll get to stop and have a sandwich or something. Anyway, let's continue. Purchased merchandise from Caesar Salad Company, $22,000. Terms FOB destination. I hope you're picking up by now that the destination contract means the seller pays shipping. Again, we're the buyer on all these transactions, so we won't concern ourselves with those. They offered us a 1% discount if we pay it within 10 days. Otherwise, the full amount's due in 30 days. So here we'll debit merchandise inventory for $22,000, and we'll credit A/P- Caesar Salad Company for $22,000. You guys, I think you'll find these transactions a little easier to journalize because they're fairly repetitive, as you're probably noticing. When we were in Chapter 2 making journal entries, they were all over the place, all different types of transactions. But this problem just deals solely with the purchase and payment for purchase of inventory and the payments for those purchases. Okay, next, after the 20th, we have the 30th, paid Caesar Salad Company for the invoice of the 20th, less discount. Well, let's look back to the 20th. The purchase was for $22,000, and they offered a 1% discount. So let's go over here and make our calculations. This is for October 30th. $22,000 is the amount of the purchase. Times they offered a 1% discount, so times 0.01. You might be wondering why they're offering a larger discount to some customers. Could have to do with the amount of volume we do with that particular company. Maybe we do more volume with a company offering us a 2% discount. Maybe it's just the company offering the 2% discount needs to turn that cash over more quickly. Okay, so let's figure this out. It's going to be equal to 22,000 times 0.01 or $220 discount. Okay, which will subtract from the 22,000. And this is equal to 22,000 minus the 220, and that's going to be cash paid. Okay, so the first thing we need to do, if we've settled this debt, this accounts payable to Caesar Salad Company needs to come off the books. So this is the 30th. Remember, liabilities decrease on the debit side, or you could look at it like this. The accounts payable went on the books as a credit, so it has to come off the books as a debit. Okay, now we're going to credit cash for the amount paid, $21,780. So an asset decreases on the credit side. Okay. Now remember, our inventory, we put it on the books at $22,000 up here, but it only ended up costing us $21,780. So we want to reduce the balance in merchandise inventory by the amount of the discount so that it's on the books at its actual cost. And that should balance the entry. Your two credits added together come back to the amount of your debit. Okay, then on the 31st, paid UK imports for the invoice of October 1st. Well, let's look back up here. On October 1st, we credited UK imports for $14,448. So liability increases on the debit side. If we've paid them, then that liability needs to be decreased on the debit side. That takes it off the books. There's no discount involved. So we credit cash, the asset, to reduce its balance by $14,448. Those seem easy now after the ones where we have to calculate a discount, I guess. And then paid Veggie Company for the invoice of the 19th. All right, let's look back to the 19th. We're showing that we owe Veggie Company $27,300 went on the books as a credit. And here on the 31st, we'll have to come off the books as a debit. Okay, the credit to Veggie Company was 27.3. All right, we've paid them. It's no longer liabilities. The liabilities decrease on the debit side, 27.3. And we'll credit cash for that same amount. Okay, you guys, I think after working through this one with me, problem 5-1B should be no problem. Actually, it is a problem. Should not. I don't think you'll have any difficulty with problem 5-1B after watching this one and working it along with me. It has almost identical transactions with the numbers changed. Thanks a lot, you guys, and look for the other videos from the chapter soon. And I hope you have a great day. Thanks. If you need me, please contact me. You can reach me on email at jweatherford@haywood.edu, or anytime on my cell phone. You're welcome to give me a call at 828-593-0459. You can call nights, weekends, whenever you want, whenever you have an issue you would like to discuss concerning the course. Thank you and have a great day.